Okay, so Meta just dropped their Q1 2026 numbers. Revenue of $56.3 billion, up 33%. EPS at $10.44, both crushed Wall Street's expectations. And yet, the stock fell nearly 10% right after. Meanwhile, over 3.5 billion people around the world are still opening Facebook, Instagram, or WhatsApp every single day. So are we actually missing a very obvious buying opportunity right now? All right, before we get into the numbers, let's first understand why the market reacted this way. What spooked investors is that Meta just raised their AI spending plan to between $125 and $145 billion for 2026 alone. That's roughly equal to their entire revenue for all of 2025. And the market is basically asking, how exactly are you going to make that money back? Because unlike Google or Amazon, you don't have a cloud business that can sell AI services and bill customers directly. And look, Wall Street hasn't forgotten what happened with the metaverse either. Meta burned through enormous amounts of cash on Reality Labs for years, and it never really paid off the way they promised. So that's the fear. That's why the stock is down. But here's where it gets really interesting. When you actually look at what's going on inside this company, the picture is completely different. According to Invyra, an independent valuation tool, the fair value of Meta's stock right now is $765.65. But the market is pricing it at just $608.75. That's a 20.5% discount to what it's actually worth. Invyra IQ rates Meta 7.4 out of 10 and issues a flat-out buy recommendation. The efficiency score hits 9.4 out of 10, meaning Meta is squeezing more value out of its operations than almost any of its peers. In my opinion, when both the valuation and the business quality point the same way, that's a signal you don't ignore. On profitability, ROIC is 22.1%, while the cost of capital is only 8.3%. For every dollar Meta puts to work, they generate 2.6 times what it costs them to fund it. That's not luck. That's not financial engineering. That's a machine that genuinely knows how to make money. On financial health, gross margin is 82%, and free cash flow is $46.11 billion a year. Meta's earnings quality score is A+, 95 out of 100. This measures whether profits are backed by real cash today, because many companies can look profitable on paper while barely having actual money coming in. 95 out of 100 means nearly every dollar Meta reports is real cash, not accounting tricks. This is a company that genuinely prints money. Analysts forecast EPS growing from $22.92 in 2025 to $57.07 by 2030. That's 2.5 times in 5 years, a compounded growth rate of 17.8% per year. If those numbers hold, people buying at today's price are going to look back on this and smile. Now, and I want to be straight with you here. There's one thing we absolutely cannot ignore. The technical picture is still pretty ugly right now. The stock at 608.75 sits below both the 50-day moving average at 630.31 and the 200-day at 678.28. The moving average cross is bearish. The short-term momentum hasn't turned around yet. The ship is still heading downward. Jumping on now means you might get dragged lower before things reverse. That said, Williams per star is at negative 90.4, deep in oversold territory. The stock has been sold well beyond what fundamentals justify. Selling pressure is likely running out of steam, but we still need clearer confirmation before calling a bottom. It's not quite there yet. So, Meta, opportunity or trap? If you're a long-term investor, strong fundamentals, 20.5% below fair value, clear EPS growth through 2030. This is a zone I'd be comfortable accumulating in. Personally, if I'm playing this long, I'm adding here. If you're a short-term trader, the trend hasn't confirmed a reversal yet. Don't rush. Wait for the signal. Because with Meta, the question isn't whether this is a great company. It clearly is. The question is simply, how long will it take the market to catch up to what the numbers are already saying? Visit the link below for the full metrics and a deeper look at any stock you're tracking.